Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to go through the week ahead analysis video. We're going to highlight some of the news this week and some of the opportunities ahead. I hope you had a great New Year celebration, and it's time to get back into the markets and have a little look at what's been going on and what we can potentially find some opportunities in going through this week. So obviously we've had some bank holidays over the past couple of days. We're going into Tuesday's trading tomorrow, so we'll be looking at some opportunities there. But really the news starts to kick off around about Wednesday, January 4th. We can see that we have CPI data out of Switzerland, which is showing more contraction here in inflation, which is a good sign for the Swiss National Bank, as they have recently been hiking interest rates. The other data we're going to see on Wednesday, which is quite important, is the FOMC meeting minutes. So jumping straight into the FOMC meeting minutes, we're looking at what are the FOMC going to do in this, or what are we going to see highlighted from the FOMC in these meeting minutes? Are they going to continue to suggest that they're going to remain on their recent plans, which is what they've been talking about, where we are going to see the decrease in interest or decrease in the pace of tightening, and are they going to stick to that rhetoric, especially as we have other data sets coming out, which is the ISM manufacturing PMI, which again is showing a slight contraction down from 49, forecasted at 48.6. So interesting data coming out this week. We then follow that by some employment data. Towards the end of the week, we have the average hourly earnings and the non-farm employment change and the unemployment rate. Now, these are all kind of highlighting to us that we're going to see a slight decline. You can see we have expected 200k jobs, 263k previous. Average hourly earnings are expected to fall to. Unemployment rate expected to stay the same at 3.7%. But if we were to see a decline in all of these numbers here, that could fuel another dollar move to the downside. That's then followed by the ISM services PMI as well, which is looking to see some further contraction here as well. So dollar data not looking particularly good. So is that going to cause the dollar to continue to fall going into this week's trading? Well, here we have the strength meter. Now, we haven't seen the strength meter for a couple of weeks. So there is a little bit of change here. We can see that the yen has become one of the stronger currencies over the holiday period, and you can see that it's at that +7 area here, where it could top out slightly. We've seen that the New Zealand dollar has continued to make its move to the downside here, coming from those +7 areas, starting to push back down to the downside. We've also seen the dollar kind of edge its way a little bit higher, but not really giving us any kind of momentum to the upside. So dollar fairly flat here, and I'm expecting maybe a decrease considering that data that's coming up this week. The pound has taken a bit of a turn. You can see this orange line here. You can see pound, one of the weaker currencies. So that's something that we're going to highlight, especially against the strengthening yen. Going into the US dollar index then, so I've mapped out this daily chart here, looking at what price could potentially do next. We're still capped around about this 103.75 handle, 103.50 handle, and you can see that we haven't really done much into this area. We've kind of sort of tapered off a little bit here. We're forming what I would call some poor lows in here, and what I mean by a poor low is something where price is kind of hugging around this area. Now, a good low is something where price comes into it and then shoots off to the upside. That's showing us that buyers have stepped in, and we've seen a fairly large increase at that point. Here we have a poor low, which means that there's been some building up around these lows, which could suggest that my price is more likely to actually trade a little bit lower here, whether it be towards this higher time frame trend line or whether it's towards this horizontal level of support, which is the 101 spot 50 handle, which are these lows that formed back in May 2022. So that could be the next sort of stop for the US dollar. If that data is going to be poor for this week, we could expect maybe a little bit more downside to the US dollar. Now that brings me over to pound, because pound's obviously had a little bit of poor performance. We were talking about when pound broke out of this channel here that we could see some further downside, but over the past sort of couple of weeks we have just been moving sideways here between the 1 spot 21.25 handle and the 1 spot 2 handle. So if that dollar is going to continue to weaken, pound may actually climb back above the 1 spot 21.25, which could then lead to further upside, perhaps with price coming back to the 1 spot 24 handle. If we take a move lower, however, break above the 1 spot 2 handle could lead to another sort of 100 pip move down to these lows here around about the 1 spot 19 handle. Moving on to dollar yen then, so you can see how the dollar strength has played in this market, because we have a really nice downward trend structure here with the markets making these lower highs and lower lows, and most recently price has come back into the previous structural lows around about the 135 handle and has continued to extend to the downside here. Now you can see we are currently trading at the 131 handle, which is a crucial price for dollar yen because it's acted as support and resistance on numerous occasions. However, if that yen strength is going to continue, we could expect maybe a move out of the 131 handle, and if we do get a close below the 126 spot 50 is the next stop for dollar yen prices. Moving on to pound yen then. So the reason why we're interested in pound is because pound has been weakening, yen has been strengthening. We've recently traded out of this consolidation pattern. We came up into the 162 spot 28 handle, which was a little bit of a breather point in the lower time frames on this larger sort of candlestick. We came back up into that area and have rejected again. So it looks like we're going to see 157 on pound yen in the coming days. If we were to take 157 out, then the lows down here at 149, these September lows at 149, could be the next stop for pound yen. I'm going to leave it there. I hope you enjoyed this video update. Good to be back on the charts, and hope you had a great holiday period. If you liked the video, please leave this video a thumbs up. Subscribe to the YouTube channel to see some of our Forex trading content, and I'll speak to you in the next video.